Hello, welcome. Come on in here. Come on in here. We're having a webinar and we're going to try and drive to offer insight on a year of regulatory clarity in crypto. And hopefully we can get there because there's so much going on in the world today that it's hard to get clarity on much. We've got great speakers that are going to help us drive to this point. We've got Candice Kelly, the General Counsel for the Stellar Development Foundation, Simon Chantry, the co-founder of BIT. We've got JP Schnapper Casteris, pardon me, JP, I didn't practice your name enough times. Senior Fellow at the Atlantic Council, Yuta Nasser, who's an economist and policy analyst with the OECD, and Yule Moeller from the Atlantic Council. And we're going to break this up into three parts today, really. So we're going to focus on the American landscape and how it relates to the international order. And we're going to go into one of the most important use cases that we've seen in a long time with tons of influence right now and tons of buzz around it and comment, CBDCs. And then we're going to really try and isolate this idea that this year is a year for clarity or not. So tons have happened this year in the United States. We've got an administration that's more knowledgeable than ever about the scene. Gary Gensler, who wrote in CoinDesk a few times. We've got Janet Yellen, who of course has had her own brushes with the industry for a long time now. We see what's going on in Nigeria, several other jurisdictions. We've got FinCEN and FATF talking a lot about how wallets are going to work. And then certainly the rollout of this mainstream use case, the CBDCs. So once again, we're going to be starting with the domestic situation, how it relates internationally, and then focus on the CBDCs and then try and drive it home at the end. So let's start with what's going on in the United States. And JP, you're in a great position to see a lot of this stuff, a real bird's eye view. So with so many leaders in the administration, what are they bringing to the table? What is their frame and what kind of expertise should we expect from that side?
Well, thank you for having me. It's a great question and wonderful to be on this panel. In terms of the administration, the Biden administration, it's still early, but so far the signals that we've gotten are quite constructive. And two examples, you already mentioned Secretary Yellen. You know, there was some concern right around her confirmation hearing because she had this quote about curtailing the use of cryptocurrencies, and it caused quite a kerfuffle on Twitter at the time. But just a month later, in a conversation with Aaron Sorkin of the New York Times, she really had a very thoughtful and constructive answer about digital currencies and the digital dollar in particular, which she described as, quote, faster, safer, and cheaper way to provide payments. That is a notable shift in tone from Secretary Mnuchin under the Trump administration, arguably the most forward-leaning thing that any cabinet member of either party that I'm aware of has said about digital currencies or CBDC. And so I thought that was very, and she also had a very detailed analysis of some of the other impacts and potential risks of digital currencies. So I viewed that as quite constructive. Secondly, as you said, before becoming Chairman Gensler, he was Professor Gensler. He was a senior advisor to MIT's Digital Currency Initiative and taught a class entitled Blockchain and Money. It's online. It's licensed under Creative Commons. You can go watch the whole thing and all 24 lectures. And I thought it was quite revealing, for example, that in the opening lecture, Professor Gensler took a survey of all the students in the audience and who had different exposure to blockchain in business or this industry or that industry and what they thought of it. And he said, well, you know more than I do, but I'm going to give it a shot. And I thought that was a really refreshing and engaging way for someone of his stature with his background in high finance and in government to approach, to be teaching that class in the first place, and then to be engaging with students and acknowledging their experience in the industry. So I think having and he ended his class in the 24th lecture, interestingly, with this quote from Benjamin Franklin about paying it forward as a way to encourage students to take what they've learned and pay it forward. And I think now today in the Biden administration, having an expert like that at the helm of the SEC will pay it forward. in terms of regulatory clarity. I will just add two caveats, though. One is it's a crazy time. There's a lot going on for the administration, obviously for the world and the nation, in the economy and public health. For any new administration undergoing a transition, and other issues, may take may take priority or zoom in and out to the forefront of the administration's agenda. And so we may see other regulators sort of get out front or be taking the lead because there's so much going on for the White House. And the second and final caveat would be clarity can come in different forms. And it sort of depends what you're looking for. It can come in the form of sort of one omnibus bill from Congress or a comprehensive White House proposal that becomes a piece of legislation, or it can come in the form of a half dozen smaller pieces, more piecemeal through greater coordination or promulgation at places like Treasury, SEC, CFTC, IRS, CFPB, and the states, right? So it may not always be this sort of thunderbolts of clarity which validates everything all at once. It may be a little more piecemeal.
I'm glad you presented it that way, because we saw Secretary Yellen just the other day mention that there was a lack of basically tools or adequate infrastructure in order to tackle what is seemingly a really difficult. They got the tiger by the tail with a lot of these cryptocurrencies and blockchain technology. What you're talking about in that piecemeal or the omnibus, what do you expect in order to create that framework? Is it going to be possible to add little pieces to the SEC's mandate, the CFTC's mandate, FinCEN's mandate, or is there going to be some comprehensive, or at least is there rumors of some comprehensive structure that could handle this?
It's a little hard to say is my truthful answer. I think we've already started to see some comprehensive frameworks put out there in draft legislation. I think that's helpful, but sometimes draft bills interact or they become part of something else or some greater compromise. I think you're right, though, that we may see. Chairman Gensler basically asked for last week in his colloquy with Representative McHenry just last week in his testimony, asked for more authority. He said only really Congress can address this. I think we need more investor protections for certain exchanges, but only, here's what I can do under my current authorities. And he stressed it just like that. So I do think we may see some requests from agencies themselves to Congress or as he put it, if you're asking me, here's what I think.
Got it. And that's a great way to with mentioning Congress and how this might fall on Congress. And I want to go to you now, Candace, and talk a little bit about what position Congress is in really to get the job done here. Now, we see that partisan lines are as stark as they've ever been. And these two blue and red guys are really not getting along. But in this case, is this something that is maybe beyond the partisan lines? Is there enough of a common ground out there that we can expect things to actually take on what we would think of as a logical outcome and not one that's prescribed based on the team that you're on?
I'm hopeful that that is the case, and that's what we're going to see, because I don't think that cryptocurrency and blockchain technology should be a partisan issue. I think what I have seen in our engagement on the Hill is that you're right. There are no. I don't even think that there are really party positions on this. It's very individualized in terms of who has taken the time to really understand this technology, its use cases, the benefits, the dangers. And so I think that that's really the challenge. And I'm hopeful that what JP was talking about with respect to the folks in the Biden administration who, already Gary Gensler has asked Congress to work with him to give him the right authorities. And I think that, again, going back to the administration, the encouraging signs that the administration is willing and interested in engaging with industry to learn more and has taken a focus on financial inclusion. I'm hopeful that with that sort of administration engaging with Congress, that industry will have the opportunity to bring the data and the analysis to really make sure that everyone is armed with the data and the understanding to be able to make wise and thoughtful regulation, and to balance what I think sometimes gets thrown out of balance, which is the consumer protection and protecting against illicit finance with this important mission of financial inclusion, which the pandemic has just highlighted, and Janet Yellen already has highlighted and spoken about. And we see that internationally as well, with FATF having a mandate to look at the impact of de-risking on all of their recommendations. So I'm hopeful that there will be a little bit more, threat-based, data-driven decision-making, and that it will be, we will rise above those party lines and really look to the facts of what this technology is and isn't.
And Yuta from the OECD, just to remind listeners, you're seeing this play out from an international point of view, watching America and all the things that it's going through right now. Do you believe that there's a way for international organizations in this context to sort of take up some of the vacuum that could be left through inaction on the part of US agencies, or at least the inability to get any traction with their ideas? So what are you seeing internationally that might add to the momentum and leadership momentum from some of these international organizations?
Sure, Nolan, and let me start by thanking you for having me in this very interesting discussion. And just to note that the views that I express here today are just my own views. It's interesting that you mentioned in your question the non-action or the lack of activity by some major jurisdictions and regulators. So perhaps I could add a different perspective, also looking at it at a more international level at the OECD with our 37 members. One consideration that is very important to keep in mind when we are discussing regulation and finance is that regulators in most advanced economies apply an overarching principle that has to do with technology neutrality. So this principle of substance over form, of same risks, same rules. So irrespective of the type of technology that we may be using to provide a financial product or service, this will not affect the way regulators assess whether or not the product or the activity falls within the perimeter, whether it's a regulated product or unregulated product. And why this is important? It's important because the absence of clarity that you mentioned, or the absence of leadership, sometimes it's not necessarily a lack of rules. There are many cases where the rules already exist. And we've seen this very clearly in the case of tokenized securities, where in many advanced economies jurisdictions, these are just securities that are being provided through a different technological means, but the requirements are already set without the technology in mind. That said, what we are increasingly seeing at the OECD, both in our work around DLTs, but also in work around other innovative technologies such as artificial intelligence, is that the level of innovation is so important that it may actually be challenging now this principle of technological neutrality, given the rising complexity, both of the technology and the level of innovation, but also of the use cases in finance. And so in this way, we are seeing that there can be some level of extra guidance or some further adjustments that may need to be made. But we need to also keep in mind that there are some things that are already in place, and there is no lack of clarity as such, but perhaps more guidance could always be helpful in boosting the activity in the market.
So when you mention guidance and that a lot of it's already in place, I want to shift it back to JP and the United States just for a moment, because if a lot of the guidance or particularities can't be solved as policy or legislation, it might come in through enforcement. We might be getting the type of clarity we need through actions being taken by these agencies. What do you foresee in that realm in the next few months? Do you see a lot of examples that might be beneficial for the industry to learn from? Do you imagine that enforcement is going to become a major thrust of 2021?
Well, what you're alluding to is it's a great point, because I think a lot there's been a lot of rulemaking by enforcement, basically, in the United States especially in the securities context, where lawyers in this space have to look at settlements, the settlements from parties or companies with the SEC, and try to sort of reverse engineer what that meant for the law and what it might mean going forward. And there's been a string of these sorts of enforcement orders in different types of crypto-related contexts and fact patterns, and sort of trying to draw out bigger lessons. We may see more of that. It happens in fits and starts, but I think it would be helpful to see more black letter law, that is to say, official rulemaking or official or sort of draft pronouncements about here's what our overarching view of this law or this regulation should be. I think that would be a little clearer and more helpful for all involved.
So for example, with stablecoins, we saw an invitation to potential issuers for no action letters, but that still left the position of a lot of these stablecoins as perhaps a security, perhaps not, but the no action letter would give you the kind of cover. Would you put that in the world of black letter law, in the sense that we understand it's clear from these precedents, or should there be something even more specific?
I think it's certainly a very helpful step, and it gives people extra assurance, and in some cases insurance, that what they're doing is okay. Eventually we may get to a point where there is an actual statute on the books passed by Congress that classifies or approves of certain types of stable coins. But in the meantime, I think all of these sorts of rulemakings and draft comments and having a normal and orderly process for rulemaking all helps us move in the right direction.
So Yuta, you were talking a lot about, and in relation to that, in relation to these carve outs and the potential to, let's say, experiment, that we understand folks' intentions is financial inclusion. It is to make sure everyone has access to these rails, the ability to use these tools. What do you see as an alternative? Are there sandboxes that we can, that you're seeing around the world that are going to be able to fulfill that, let's say, black letter law need and bridge the gap so that participants can jump in 2 feet first and get to work?
Definitely, Nolan. And it's true that we tend to see that, to look at this whole process as a one-way street, coming only from the policymaker side to the market. But it's true that increasingly in the past few years, the policymakers are encouraging the industry, particularly in advanced economies, to get closer to the regulators, either in formalized sandbox projects or simply by reaching out to the regulators for clarifications, such as the ones you mentioned in the US. Now, we are increasingly witnessing very, very interesting initiatives on sandboxes that are even tailored to DLT technologies in finance. And their market participants can actually engage with policymakers. They can test their projects in a more contained and safer space. They can take advantage of certain exemptions and experiment in an almost near live environment. And just to mention a couple of examples, the Financial Conduct Authority in the UK has allowed for testing of cutting-edge DLT-based financial services products. And last year, we saw the announcement by the European Commission of the proposed pilot regime for DLT-based infrastructure for digital securities, for example. And all that experimentation is bringing closer the regulators with the market participants. And this engagement helps the regulators and the policymakers to identify, together with the market participants, what are the regulatory obstacles, if any, and the results of all that experimentation feeds naturally into the sort of guidance that is asked by the industry. It informs it, and it even creates the need for some guidance or for even for some more permanent adjustment to the rules. And just to close on this kind of experimentation, what we're also increasingly seeing is that central banks around the world are rolling up their sleeves, and they run pilots to test the benefits and the potential limits of DLT technologies around the CBDCs. And the pilot projects have risen exponentially in the past 18 months. It gets the policymakers closer to the technology. They get a better understanding themselves by getting their hands dirty. And I would definitely expect this to support further progress in policies and rules and regulations around CBDCs and DLT-based financial services.
Well, really fascinating that you've underlined the momentum that the CBDCs have gotten, especially from these really well-positioned institutions that, you know, just a few years ago were seeing this as just a research project, but now seem to be, you know, putting the rubber to the road. Now we're about to transition to our more in-depth talk about the CBDCs, but I want to go back just for a little last comment, something I think we missed, because what I'm hearing is we have a reason to be optimistic, or at least we can envision a lot of concrete things happening this year and real progress for the industry. But I do want to hear a little bit more about what could hold the industry back from Candace. I just want to hear a little bit more about what could hold it back and what the potential you know, throttles on what I understand from both Yuta and JP to be a pretty positive year ahead.
Yeah, so I think just building on what Yoda was just saying, I think that if regulators and policymakers don't embrace this idea of sandboxes and innovation labs and things that we see where public and private are working together, then we are left with regulation by enforcement. And having been a federal prosecutor for many, many years, and also having been on the other side of investigations, I can tell you that the exchange of information is very different when a company is under investigation. And certainly as a prosecutor, as an investigator, you learn a lot about that particular company and how they did something. And from my perspective, that's just not the best way to create guidance for an entire industry, as opposed to engaging on the front end. And so I think it's a matter of both sides. I think the industry, and I see a lot of this shift that the industry is recognizing that going in the front door and talking up front and trying to engage and explain and close that knowledge and trust gap is really the path to better enforcement. But if that doesn't shift on both sides, both the public and private side, then I think that would be a throttle and a hurdle.
So JP's first point, that Mr. Gensler was open as professor to students coming in the front door and helping move the class along, is a pretty good sign for these sandboxes and other projects to actually have material impact. So material impact, we are talking about CBDCs. We've seen where I am based currently, just in the islands next to us, one of the first live projects out of the Eastern Caribbean Central Bank. We've also got the situation in China, which is more and more interesting every day. And we've got some great folks to talk about it today. Simon, first of all, who has helped launch this first CBDC. Simon, tell us a little bit about the project and what you think 2021 has in store for these fascinating new instruments.
Sure. Yeah, and thank you so much for having me on today. It's a real pleasure. So on March 31st, we launched in collaboration with the Eastern Caribbean Central Bank, the DCash Project, which is effectively a CBDC, a digital Eastern Caribbean dollar. As you may or may not know, the Eastern Caribbean Central Bank is this monetary authority for 8 countries in the Eastern Caribbean. We have rolled out in 4 of them so far. So Antigua and Barbuda, St. Lucia, St. Kitts and Nevis, and Grenada. St. Vincent is soon to come, and the urgency there is obviously a little more heightened given the more recent natural disaster that they experienced. So obviously our support and our hearts go out to the people there dealing with that. In fact, actually Barbados, we were just speaking before the call that Barbados also suffered a bit after that volcano. So I guess the motivations for the ECCB to undertake such a project were effectively looking to connect individuals and businesses across all countries in the Eastern Caribbean Currency Union. So this is a a group of countries that is still somewhat still uses checks to a large degree. They don't have cross-institutional payment networks, and so if you're looking to pay a client who's part of a different bank, it represents a number of challenges. And so in this case, there was certainly a number of motivational factors. Inclusion in the formal economy, I think, is certainly a big one as well. But definitely, this represents a massive upgrade to their payment system. This is a region that hasn't been able to upgrade to a faster payment system or anything like that. And so I think this is a step in that direction to provide sort of powerful, cost-effective digital financial services to their citizens and businesses.
Yeah, I can even speak to that. I see here in Barbados, especially with some of the COVID lockdowns, the lineups for the grocery store were substantial, but the grocery stores always have the actual Western Unions in them, and those lineups were twice as long. And you immediately see where this thing could impact just from waiting in lines here. So Yule, I want to continue with you and the Atlantic Council, and I know you've got a little bit of research to share with us, really around adoption. So Yule, would you like to introduce yourself and then show us a bit of the research you've got from the Atlantic Council to give us a sense of what's going on globally, because it's not just live projects. There's a lot about to go live.
Yes. All right. Thanks so much, Nolan. And it's really an honor to be part of this panel. I'm super happy to be here. Can you guys all see the map now on your screens? Excellent. So this is the Atlantic Council's Central Bank Digital Currency Tracker. Right now, we are up to 75 countries and central banks. A year ago, we started at 35. So, that alludes to some of the momentum that IOTA and others were talking about. I think generally we see a pretty pluralistic environment where CBDCs exist next to other types of digital currencies. And, beyond the Caribbean, we just heard about DCash. Folks are probably familiar with the sand dollar. We find that central banks, that engage in research, development, piloting of CBDCs are often really mid-sized economies, many from emerging market countries. And the key drivers are often sort of a loss of monetary sovereignty or autonomy and the risk of foreign currency competition. Let me go through just the map, and I can show the functionality a little bit. So, some examples include, for example, Thailand. You can click on it as well and bring up a panel with some, an overview and key developments. Thailand, for example, is right now running a cross-border wholesale CBDC pilot with the Hong Kong Monetary Authority, PBOC, as well as the UAE Central Bank, called the MCBDC Bridge. They're also doing a sort of domestically focused retail CBDCs. There's other countries like South Korea is piloting a CBDC. Saudi is doing one, Project Arbor, another cross-border CBDC with the UAE. You have Ukraine. Sweden is an example of a more advanced economy running a pilot with the e-krona. And then of course you have the big guys like China. In April 2020, they became the first really major economy to launch a pilot of a digital currency. I think the idea is really to increase the domestic use of the digital yuan in the run-up to the Beijing Olympics. We estimate that they have about 150 million renminbi in circulation, so around like $23 million. With the EU, the ECB is aiming to get a CBDC off the ground maybe in the middle of the decade. We just heard last week, I think the Banque de France made an announcement of 100 million bond settlement on a Ethereum public blockchain. So that's it's an interesting development. We have on the UK, they just formed a new task force between UK Treasury and the central bank to really look at the key objectives, applications, and risks of a potential CBDC. So there's a lot happening. Finally, looking at the US with the Boston Fed, set to publish the results of their CBDC trial with MIT this fall. And I think it's also going to be open source. So that's could be a real opportunity then for other central banks to use it as they're building out their projects. Generally, I would say, you know, we see a lot of the retail CBDCs are not necessarily direct, but you rely more on a two-tiered structure with an intermediary in the middle. Yeah, let me just stop here and then we can go back to it later. Thanks.
It almost looks like you could make it around the world on CBDCs alone pretty soon. You could circumnavigate the planet. And of course, each of these CBDCs has, let's say, a different motivation or intention. Simon, you must see more than, you must have seen more than one reason that one of these large countries versus a small country would want to roll out a CBDC. What's that like from your perspective? Are there different objectives that you can clearly discern between a developing country having a developing economy with developing payment rails, having a CBDC versus somewhere like Korea, which has some of the most sophisticated payment rails in the world? They can pre-program where you use credit cards, for example, so that stimulus payments are only used at local stores and not big box. So I think the question is both for Yule and Simon. So what are you seeing in the market for intentions of the participants issuing these?
Yeah, I'm happy to take that one first. So yeah, I think you nailed it, that in developing nations, it's largely an issue of driving down cost structures and introducing more powerful, more connected payment systems for the end users and businesses. And there's plenty of headroom and there's plenty of opportunity to innovate and create value for throughout the economy in developing nations. I think probably one of the common goals of CBDCs, whether or not it's stated or communicated clearly by the central banks, is increasing their familiarity with the technology that's underlying cryptocurrency. I think that the emergence of these private cryptocurrencies over the past decade, it's especially every time that you see a bull cycle like this with the different cryptocurrencies, more attention is given to the space, and there's more desire to understand the nature of the movement and why are more and more investors piling in, why are more and more people using these products, and especially with DeFi, more and more complex financial products that are administered in a completely decentralized fashion. So I think what applies across the board internationally is the desire for central banks to get their hands on the technology and understand, how can I take advantage of some of the elements, the innovative elements that have contributed to different crypto assets or cryptocurrencies, whatever you want to call them. How can I get my hands on some of that technology, incorporate it into the design of my digital currency to better roll it out throughout even the domestic economy and internationally? I mean, China's stated goal is to export its its currency as much as possible, and so I think that that's certainly one of them that's probably not talked about as much. And well, it hasn't even been communicated to me in that sense. I just sort of pick up on it. I think that and just logically, it sort of makes sense. I think another obvious one is cross-currency, cross-border transactions. The nature of the technology is such that I'm sure most people on the call understand that you can connect these networks in order to drastically reduce the cost required to exchange between currencies, decrease the latency. And so I envision this sort of future where CBDC networks are interconnected and the exchange and swap agreements between countries and monetary authorities are programmed into these networks, and so you have this sort of frictionless exchange, obviously with the necessary circuit breakers and whatnot built in. But I would say, yeah, those are certainly two factors that I think are common amongst developing and developed nations. Perhaps another would be direct benefits payments. I think that the ability to reduce cost structures by way of CBDCs and to have a CBDC network as sort of this public infrastructure, a public good infrastructure that the central bank is able to maintain with technology partners, of course, but maintain at a low cost and then open it up to the public. in developing nations, this could drastically reduce the cost of payments, which have just sort of continued to increase over the last 10 or 20 years. And so if you have a public good in a CBDC network, you're basically reducing the cost structure for payment service providers. So now you can have payment service apps come in that are strictly payments, and they don't have to process and settle transactions or maintain account balances. They just need to plug in via API, so their cost structure is reduced. And I guess that's actually true across the board. That's not just developing nations, but it's certainly more applicable to developing nations where financial inclusion is a problem. So I guess I see that happening, and I see that happening and taking place in a number of different ways. I wouldn't be surprised if we see some of the social media apps incorporate more payments functionality. I thought Facebook's approach was super interesting, and I know it's completely separate, or completely separate, but doing your own coin versus just incorporating, and I know that actually Diem has evolved to say, yes, we'll work with the CBDCs, and so I think that's a good approach. And I think that a lot of the applications that we use, you may just see them incorporate payment functionality, and I wouldn't be surprised if that was CBDCs and stablecoins.
If it was only financial inclusion, we would be missing some of, and especially about the UBI part. The UBI is not just about inclusion. It's a bit about the velocity of money. And that might not mean much to people. And I know it's not really regulatory, but more and more it is a matter of policy that the central bank issued currencies don't have an intermediary. Is that going to be one of the big drivers of adoption over the next few months, that this problem has to be solved, that it can't go through the intermediaries because it is having clear effects on, for example, wealth gap, especially in advanced economies?
It absolutely could be. I think that's an accelerated timeline. I think, the first version of the CARES Act had provisions for a digital US dollar in there, and that obviously got removed because these are projects that they can't happen that quickly. But I do think that, they are the sort of go-to rails that will be used for a UBI or a benefits payments distribution. And you're totally right. I think that they could drastically increase the velocity of money that's been, the graph for that has been definitely down over the last number of years. So, to your point, I definitely think that that's in the future.
Now, what would be some of the, and this question is for you, Ken, is just looking at some of the policy objectives that are around some of the developed economies between themselves. How are they going to be able to, let's say, manage some of these limitations on cross-border payments when everything is being issued on these rails and we're using public ledgers? Is that going to be a problem?
I think to me, and what we spend a lot of time talking about from the Stellar Development Foundation and having the vantage point of the Stellar Network, which is really built for interoperability, is that your question sort of implied that these rails would be uniform rails across the different countries. And I don't think that is what's happening. So as Ole's map showed, each country is at a different stage of development. And I think one of the most important things for all of those countries, developed or emerging economy, is to design and think about those pilots and that research with interoperability first and foremost. Because if that is not built into whatever your CBDC project is, we're going to end up in the same situation we are with the current problems that blockchain technology is trying to solve, which is a problem of it's all of the friction of cross-border payments. And the whole kind of promise of blockchain technology will go by the wayside if that cross-border frictionless payment ability is undermined by every country designing sort of with their own economy and their own country in mind and not with interoperability in mind. So I think that is, to me, the biggest sort of build it from the beginning as opposed to trying to add it at the end.
Got it. So it's if it's left up to the market forces that we see today, there's a chance that you're going to be left on some stranded platform or without the ability to really exit if you need to, and get use out of it the way you would like. Great. So I think we've tackled the United States situation. I think we've got a bit of an idea of what's going on globally, internationally. We focused on this use case, but we still need to drive to the point of our webinar today, which is regulatory clarity. And I'd like to give each of our 5 speakers today the chance to, I guess, a short closing statement on really what they see as the answer to that question. Is there clarity coming this year? Is it going to result in some clear direction, or are we going to continue to move 1 step forward, 2 steps back? Is it going to be fits and starts, and we're going to be still looking through a bit of a lack of consensus on where this fits in the future? So let's go back to you and the stellar organization, Candice, and let us know, what you think. Is this a question mark? Is clarity finally in order for the industry, or are we going to stay in a relatively murky position?
Well, as I've been, my theme of the day, as I've been saying, I am optimistic. And we talked a lot about the folks inside the administration and the education on the government side. But to me, the other piece that we haven't really touched on is how many blockchain projects have recognized by their hiring folks either in-house or on their boards or lobbying firms, people who have been in government and who speak the same language. And so I think that has been demonstrated by all sorts of announcements in recent months. And certainly even, I joined the Stellar Development Foundation in September of 2019. The number of people who have reached out and have joined this broader ecosystem who have some government experience, I think is encouraging, because as I keep saying, closing that knowledge and trust gap is the answer and the recipe to thoughtful and helpful regulations. And I think that I see that happening on both sides of the public and private divide, which hopefully is a narrowing divide.
Yuta, you've given us a lot of perspective on this, working together and balancing expertise and coordination across organizations. Is 2021 the year for this stuff to click?
So it's very difficult to make any kind of predictions in general, but in particular in the crypto space. But what we can say with confidence is that we have seen impressive progress made by both by market participants in the development of applications for finance, increasing interest by policymakers, and a lot of ground has been covered already in terms of policies in a very short time span. More understanding is being gained by policymakers. As Candace mentioned, there's investment in people, in skills, in knowledge, and the technology itself is maturing as well. Now, with all this momentum building, particularly around the work around CBDCs, what we are looking forward to is to hear the details about the outcomes of all those pilots run by central banks and by the BIS hub around the world, because these outcomes will inform the next steps in terms of policy making and will drive any kind of action. One very last thing I would like to highlight, that while it's natural for us in this panel or in general nowadays to focus on CBDCs, we shouldn't overlook the potential transformational effect that DLTs have in the structure, potentially in the structure of the financial markets more broadly. And recently at the OECD and its committee's FinTech group, we launched a project on decentralized finance. And why is this interesting? Because even there we see the role of CBDCs as one of the important considerations has to do with the interconnection between the decentralized finance environment and the traditional financial markets. So there is a lot still to be analyzed and to be looked at, and it's very, very exciting to work on this kind of areas.
Yule, are we going to be seeing a DeFi, CeFi map from the Atlantic Council on your blog anytime soon? Is that a 2022 project?
So yes, I mean that's a great suggestion. I'll take it back to the bosses and we'll discuss it. I think overall, I think your description of fits and starts is a good one. IOTA talked about sort of, the rapid increase in CBDC research is pushing regulators to act, and the results from the sandboxes kind of help policymakers better understand the technology. But I think, as I said, Boston Fed will publish their results later this year, but we really need buy-in now, right? From Congress, the administration, and private sector, broader elements, really the whole public, and to move this process forward. I would also say that, with this pilot coming out, I think there's a desire for US leadership internationally. So this could advance other projects in other countries in 2022. And then to Candace's earlier point, I think, the international policy coordination is just super important. So project like Thailand's MCBDC bridge can really sort of help inform policymakers on some of the key questions, payments, clearing protocols, information sharing, as well as data privacy. So that's what I would say. And then stay tuned on any additional dashboards and maps.
Oh, Yuta, please respond.
Yes, if I may add, back to linking to what Ole just said, this is also an important point in terms of the role of international organizations. And we increasingly see the benefit of promoting cooperation and dialogue and best practice sharing in platforms such as the OECD and other multilateral organizations. So just an important point to make.
And in your case, Simon, with BIT, are you going to see a lot more of these projects coming forward? And is there going to be a way for what you guys are rolling out as technology to start nudging even more countries over the edge?
Yeah, absolutely. We're seeing a lot of movement, and it's certainly a change from, we started working on this in 2015, 2016. And back then we were sort of the annoying fintech company knocking on central bank doors, and the dynamic has certainly changed. So yeah, you can expect to see plenty more projects throughout 2021.
Last words to you, JP. Where are we going to be in December? Where are you going to be? Are you going to be in the middle of a bunch of fights, and is everyone going to be at each other's throats? Or are you going to be there leading the charge with some, lots of inter-institutional cooperation?
Well, hopefully not a lot of fights. I think I'd love to be part leading the charge, or at least on a team like this. My 3 takeaways for 2021 would be, I think there's the major progress with CBDCs has a symbiotic and sometimes subtle relationship to stablecoins and Bitcoin. And I think that's overall net quite favorable. My second takeaway is legislation takes time. The infrastructure bank, for example, which was introduced in 2007 on a bipartisan basis. It's been like widely agreed upon by members of both parties. And here we are 14 years later, still trying to put it in effect. So, will we see something in the next 6 months by November 2021, right before Congress recesses for the holidays? I don't know, but I think, as Candace rightly highlighted, startups and developers and associations are getting much more organized in Washington, and that alone is a major step forward.
Great. Thanks, JP. Thanks, everyone, for your time. I feel more clear on the way things are going in 2021. I hope our listeners to this webinar do as well. Thanks, everyone, for your time, and come back for the next CoinDesk webinar. Thanks, everyone.
Thank you.
Thank you.
So,
Take care.